changes are predicted for the national real estate market.
Many young people now deciding the housing market is just unattainable.
It is bloody hard to buy a property in Australia right now, being a Gen Z or a millennial.
I've always been pretty obsessed with property. So I bought my first property when I was 20. I was essentially a broke student. I knew that in kind of 6 months we had income. You can see if something's working, but banks wouldn't take it. And I spoke to a few brokers as well who immediately pushed it aside and said, too hard, we just can't help you.
A lot of young people just see all the doom and gloom. And
it almost doesn't make sense. I think it's sad. You very quickly grow a portfolio that is so cash flow negative. It's not sustainable.
There's some YouTube channels where it is really highlighting how hard it is. I've got someone sitting across from me who's done better than the majority of people.
This is probably my entire property strategy has been gut feel. I'm not educated in the property data market, so it's not trying to time the market. The things that now I know about, it changed everything. So this strategy has allowed me to grow a portfolio that's not so negative. It's so empowering to know that you can make such a big difference to your life.
You're listening to the Follio Property Podcast. I'm Reece Battle, and this week I'm actually here with a very special guest. Now, this guest is 25 years old, has a $9 million property portfolio, owns 3 cafes, recently become a mortgage broker too, I believe.
Yeah.
Emma Roberts, welcome to the Follio Property Podcast.
Thank you for having me. I'm really excited.
I was just telling you off air, I was excited to do this podcast on so many levels because there's so many angles that you're kind of scratching at the moment, which from the Follio perspective, we probably haven't touched on too much, and you don't see it too much in this space as well. So I guess the first question is, why property, and when did you get into, when did you start thinking about entering that space?
I think I've always been pretty obsessed with property. I don't really know why exactly, but from a very young age, I always, the dream was to buy a house, and I guess the goal wasn't to build a huge portfolio, but it was definitely that I wanted to buy a property. I liked the idea of having something quite physical that I could make nicer and live in and that sort of thing. So it's always been something I've loved. And
in terms of, we mentioned there, the $9 million property portfolio, how many properties are within that portfolio?
So it's 9 now. I think it's actually just gone over 10 mil almost, which is very cool.
Awesome.
We've just recently purchased another one, which hasn't settled yet, but it's going to be a massive reno, and I'm excited for it.
Cool. Hey guys, quick thing to share. If you're serious about investing in Australian property right now, you need to see what we put together. It's called the National Investment Report, and it's our brand new monthly deep dive into exactly where the market is moving, what the data is saying, and what the smart investors are looking at right now. Just scan the QR code on the screen right now or click in the link below to fill out the form. Talk us through that first property. Where were you at? Obviously, at the moment, 25 years old. So I'm assuming this was probably done in your early 20s or even late teens. Talk us through that first property and where you're at. Because the thing I'd love to touch on is it is bloody hard to buy a property in Australia right now, being a Gen Z or a millennial. I was just mentioning to you off air, there's some YouTube channels where it is really highlighting how hard it is for a millennial or a Gen Z to enter the property market. Yeah, I've got someone sitting across from me who's done better than majority of people have done that are beyond that. Talk me through the kind of the mindset and what it was like when you got your first property.
Yeah, so my first property I bought when I was 20. At the time I was working casually in hospital administration, so I was on a good kind of income for my age group, but it was casual income. I was studying full time as well. I had been saving for a very long time for a property, but it was mostly that I knew that was what I wanted to do, and I had some money to do it, but I had a very clear goal. My goal was to purchase something, so I kind of knew where I was putting all of my savings aside for. And then I went and bought one. It was a very, in hindsight, emotional purchase, which is kind of what I try to avoid now. But I don't own the property anymore. I've sold it on since. But it was a house that I loved. It was big windows. It was pretty. It was exactly where I wanted to live. Not it was it wasn't in a blue chip suburb. It was a not too expensive house at the time.
Yeah.
But it was a great property for me to start in.
And then talk me through. We won't go through your whole portfolio because we'll be here for an hour. But talk me through that next property. So you've made some crucial mistakes, but like you've said, you've learnt from those mistakes. What did the next asset look like, and how long from that first acquisition was the next one?
So still many mistakes in the second property too, in general, but I take risks and I learn from them. I think that's the best thing about life in general. But yeah, the second property was in the Adelaide Hills. It was a dual tenancy property, which so there was one side that's a 2-bedroom unit and the other side is a 1-bedroom studio unit. And yeah, that property kind of opened up the world of finding ways to increase yield and rental income in properties. And I still have it today. It's an awesome property.
Was that a purposeful direction to go down that route, or did the opportunity just arise and you said, "Oh, look, I can get seriously better returns when I'm looking at this type of strategy"?
I think it was on the market for a very long time, which is why I was particularly interested in it. Especially being at that sort of like age and income level, I couldn't compete with the people who were like owner-occupiers buying, a dream house. But this property, like I could clearly see that it could be rented out separately and cash flow was a big thing. So yeah, I kind of noticed it quickly and thought I wanted to give it a go.
And this would have been deep in the Adelaide sort of bull run of property prices, I'm assuming. Like the Adelaide market already started moving at that point?
It had already started moving. So I bought my first property kind of April of 2020, and then the next one was 6 months after that. So kind of into COVID, it hadn't quite like completely surged yet though.
Yeah. What sort of education were you doing? So podcasts would have been picking up. I know it's in this space, there's a hell of a lot of content you can take out at the moment. I think the challenge you do find is you might be hearing a different voice here and a different voice here, and they can conflict. You do find, once it probably you get a little bit more understanding, you find the voice that resonates with you. But what sort of content were you consuming, if any? Was there any sort of data warehouses you were looking at to try to self-educate, or was it purely get in the market, learn from my mistakes? What should I be doing better for that next asset?
It was more the second option. So there wasn't very much self-education in the form of like podcasts, videos, things like that. Most of it, and this is probably what's formed my entire property strategy, has been kind of gut feel, in that I've always wanted to buy houses that someone could enjoy and would want to live in as an owner-occupier or a renter or whatever that may be. And I guess I'm not educated in like the property data market. I'm not a financial advisor. I'm not anything like that. So it's always been not trying to like time the market or do anything that I think the suburb will increase. It's more me thinking that owner-occupiers will want to buy property and need to live somewhere, and that's what's kind of framed my mindset overall.
Look, I think taking data aside, absolutely, the data is going to tell you, from a timing perspective, which are the better areas to enter. But I think you raised a really good point there, and that is a core philosophy of our business. Buy where the owner-occupiers are.
Yeah.
There's 2 key reasons for that. One, it's going to drive price growth because there's going to be the good amenities there. You have those schools the schooling is a huge one as well, where you're going to have those owner-occupiers emotional, willing to pay more to get into those suburbs. Or if a market does cool, those areas are still going to have a higher demand because of those amenities, maybe because of those schools as well. So I think data aside, I think just even the thought process of buying where they're owner-occupiers, I think that's a great strategy. Yeah,
and better than me taking a risk, taking a guess, and thinking that this particular suburb will go up. It felt much more safe in a way to kind of like it. You can kind of whether someone wants to live in a house in a suburb, and that kind of gut feel went a really long way in, especially the first few properties, rather than taking someone else's opinion and advice essentially on that.
Oh, that's awesome. And I guess from that strategy, casual income on that first asset type, like were you just trying to get into where you could afford at that point, or was there more I guess data driven around where you're actually buying at that time, or it was purely like, I want to get into the housing market, my serviceability can fit this, this with my budget, owner occupiers aren't going to this property, I'm getting in?
So it was finding somewhere that I would personally have wanted to live that was within my budget. So it very much wasn't where I grew up. The houses very close to the city and things like that were completely out of my budget. So I went further afar, but it was in Bridgewater, in Adelaide, and as a suburb was somewhere that I would have wanted to live and did live for a year while I had that first property. And the second one was in Mount Barker, which is slightly further afield. So I guess it wasn't data driven. It was driven by somewhere that I wanted to live and therefore thought that other people would want to live as well.
And how educated were you on the Rentvesting strategy? We've done numerous podcasts on this. We've actually had some guests on recently that, especially from the East Coast, predominantly Sydney, where this is a strategy that almost is a necessity for the younger generation to get into the market. How much were you aware of that strategy? And is that the strategy you continue to kind of? So
I lived in the first property that I owned and continued to live in it with the second one as well. So I didn't rentvest then. I have since. It is a fantastic strategy, and I think that it saves a lot of money. It's really expensive to live in a house that you own, unfortunately, and it almost doesn't make sense, which is, I think it's sad. Awesome.
And then, so you got 2 properties here, both in Adelaide. Property number 3 and property number 4, are they still local to yourself, or are you starting to look at borderless investing at this point?
So at that point, so by then, I'd finished university and me and my partner decided to move to Brisbane purely because we'd finished university. We were wanting to do something else, wanted to explore. We'd only ever lived in Adelaide, so wanted to do something else.
And what year was this, sorry?
This would have been 2022.
Yep.
So we moved up to Brisbane we're planning on moving up to Brisbane, and we were in a position that we could buy and decided to do that rather than renting. It was probably our most, in hindsight, risky purchase. It was more impulsive than a lot of the other ones and more there wasn't very much thinking behind it. It could have gone very badly. But there was a property that we found that looked to be in a good suburb without knowing Brisbane. And an offer was accepted when we put it in, and I flew up there during cooling off to see it, thought it was okay, and we went and purchased that. So that was property number 3, and that property was it's awesome. It's a townhouse in Paddington, so in very near to the city, and we converted the bottom down downstairs into an Airbnb, which we then rented out while living upstairs. So it paid for our mortgage while we were there and kind of allowed us to have a year of just awesome funness and not much stress.
Probably not a bad time to buy in Brisbane either. In
hindsight, very, yes. The risk definitely paid off, and I guess it wasn't, it was a suburb that was close to the city, and, I did a lot of research on that particular suburb. It could have gone poorly, but it's good that it didn't, and it turns out it was a very good purchase, yeah.
And that similar strategy, obviously, your second property, you had the dual occupancy. It's a tongue twister for me right now. Cash flow was kind of key.
Exactly.
Going into that Brisbane asset, was that always the plan to, the reasoning behind buying that asset was to have some sort of element where you could accrue an extra income?
Yeah, which is why we were particularly keen on it. We wanted to buy something, but when we saw this one that could so easily be converted, it already was we only had to put in pretty much a kitchenette for it. So easy to convert it, and we did kind of the numbers on what we'd get from it, and the flexibility it allowed us was fantastic.
And at this point, have you finished university at this point? Or?
Yeah.
Yep. And what were you doing then?
So working in hospitals as well.
Yep.
We were able to get jobs over there in the same industry, still in emergency departments. So
I'd imagine, and correct me if I'm wrong, entry level into hospitals from an income perspective is not probably what you'd expect, as an experienced person in that industry. So this strategy of using this dual occupancy for the extra additional income is probably helping you from a serviceability standpoint to go on to that next purchase.
It actually wasn't helping as much as I would have hoped. I didn't know about kind of different lenders at that time that took different forms of income. So because it was Airbnb income, most of the big banks and things like that didn't take it. We quickly became quite stuck, and we eventually came home and started a business, and we're even more stuck. But the banks at that point, from the knowledge I had, I wasn't able to service anything more from there.
And you were using a mortgage broker throughout this process, or were you going direct to banks?
The first 2 purchases, I went direct to a bank. The third used a mortgage broker, and they were good, but now I know about a lot of other different options that I wish that I had known about to be able to do.
It's a really good point, and I think we speak about this a lot when we get investors coming direct to us. We don't have an in-house finance arm, but we do work with a load of brokers that specialize in investment properties, and particularly building out, because not every mortgage broker is the same. And personally, I've changed mortgage broker 3 or 4 times throughout my journey, and I think some mortgage brokers are going to specialize purely on that first home buy, maybe a house and land package. But once you start looking to build a portfolio, you want someone who has experience using alternative lenders, non-bank lenders, has relationships where they can probably get some policy sections across the line as well. So
exactly.
I think that's a key point. If you are looking to grow a portfolio, you really want to start to look at someone who specializes in those areas too.
Yeah, and it makes such a big difference. The things that that now I know about, and the different forms of income they can take, and especially with self-employed people as well, you can just grow so much faster and without less hurdles. The policy in some other banks is much more easy than other banks.
And then you said you moved back to Adelaide to start a business. I'm going to assume that's the first cafe.
Exactly. Yeah.
Which someone who's actually floated with the idea of a cafe or a coffee shop, looking at some of the margins in these businesses, they are brutal businesses.
They are tight.
They are very, very tight. So what made you do that decision? And how did that business perform? Is it still operational? And talk me through that those early years.
So moved back from Brisbane with the aim of opening a cafe. We'd kind of, like, while we were in Brisbane, we knew we wanted to open up a business, and didn't really know what, or also didn't necessarily have the skills for many different businesses because we were quite young and just graduated uni. But knew we wanted to do something, and cafes felt kind of achievable to us, and we'd seen all of the different ones in Brisbane especially, and kind of I love the side of hospitality that's kind of forming a community and talking to people and allowing them to see their friends and do all of those things, and I love that side of it. So we moved back to Adelaide to open our first cafe, which is called Only Social, and it all kind of went from there. We didn't have experience in hospitality or coffee at the time, and so it was a big leap.
I can imagine. And how, from a property perspective, how did you keep going in those early years with the cafe? I imagine income streams would have probably completely changed. How did you have the ability to keep on going from there? Yeah.
So at first we didn't, and it was really disheartening. It was a new ABN, a completely new business. So I knew that, within kind of 6 months, I realized that we had income. It's, you can see if something's working, but banks wouldn't take it. And because I wasn't speaking to a broker at first, I kind of spoke to some banks, and they said, no, we need 2 years of tax returns, and you're a new business, and, you can't prove your income. And I spoke to a few brokers as well who kind of immediately pushed it aside and said, too hard, like, you've got investment properties and a new business, we just can't help you. I was very disheartened, and essentially came to the conclusion that I'd have to save up in cash to buy another property. And then I met a fantastic broker who introduced me to the world of alt-doc and self-employed lending, and it changed everything for me.
Awesome. And with the properties, you've mentioned obviously Adelaide early years, did the career move and managed to actually probably time the market really well getting into Brisbane when you did. The rest of the assets within the portfolio, whereabouts are they based? Have you gone regional from an affordability play? Where does the rest of the portfolio sit at the moment?
So all of the properties are in Adelaide apart from this Brisbane one, mostly just because it's an area that I know and I'm comfortable with. We haven't chosen to go regional purely because I guess we have a strategy that works for us and I feel very comfortable in doing, and I don't really want to stray from that with something that I don't know very much about.
We've had a pretty prominent Perth investor, Trent Fleskin's been on our podcast a couple of times, he's very pro-Perth through multiple cycles. So he's never invested outside Perth, Western Australia. He probably has a similar sentiment to yourself where it's, I know the area. I want to, I know exactly where the good fundamentals are. Yeah. And even when a market is maybe moving in a different cycle, I'll find sort of micro markets that are moving within it. Talk me through the property management side of things though, because you mentioned there you got like seriously burnt on the first property.
Yeah.
One, is there cash buffers in play to kind of deal with these problems? And two, are you still self-managing this whole property portfolio?
So there was not very much of a cash buffer in place for the first few properties. I was essentially a broke student that had properties. But now there's a buffer there now, and I think that's probably one of the most important things. You need to be able to. I wouldn't want to be put in a position where, I have to sell a property because there's no buffer, and I think that's you want to be selling by choice. And we have self-managed for most of the property journey. Apart from now, it's been from about 2 months ago. We've had a property manager for the rooming houses, which has been really nice. It's been great. But the other ones are still self-managed.
Yep. Because, I could just think, like, how many tenants would you, because you got the room sharing, how many tenants have you got across the board then?
It must be more than 30.
The fact you can't tell me means there's a lot of people.
It's a lot, yes, yeah.
Because that would be, like, I've struggled. I know a good property manager from a bad property manager. I've struggled with property managers before, and the fact you're doing this yourself as well while running 4 businesses, I guess, with the mortgage broking side of things, it must be pretty time consuming.
Yeah. It absolutely is. And, I guess originally the self-managing was from a cash flow perspective, just because we would rather save the money and do it ourselves. It's been a huge time relief for us to now have got the rooming houses managed. But I guess, it is hard to balance everything. I have an amazing team that we work so well together, and within the businesses there must be almost 30 staff now as well. So it's not just me, and it's not just me doing everything. I have an amazing team that is so helpful and does a lot.
That's awesome. And in terms of like from a cash flow perspective as well, is the strategy with these properties, is it a long-term hold and use that cash flow to go again, or is there a particular strategy with some assets versus others, or what's kind of the mindset behind the current portfolio? So
I have always had the mindset that I will hold them for as long as possible. I mean, the ultimate aim for me is to purchase something, do a renovation or an equity, make some additional value to it, and then reuse the equity to something else. One day I will sell them down and that'll be in more of a cash flow stage. But right now I'm really focusing on growing our portfolio as much as we can, and kind of using the leverage and the gains that come with that as well. Talk
me through the room sharing strategy that you've got at the moment. What's been the biggest challenge behind that? You mentioned at the start, obviously, that was probably not even room sharing, actually. What's been the biggest challenges behind that strategy, and what's been the biggest benefits outside the obvious, the additional income?
Yeah. The first property that we had was the dual occupancy, which had 2 separate kitchens, like 2 separate complete living areas. Now we've kind of moved into more of rooming houses where we rent out like individual rooms to people, and we've also on most of the properties have granny flats as well. It's the biggest thing I kind of have learnt from it is that it takes a bit more time, but in saying that, it's absolutely worth it. I guess we get to cater and provide somewhere for students and people who might be in Adelaide temporarily, or on a lower income, with somewhere to live that's not going to completely push them out of their budget. So I really enjoy having the rooming houses, and it's really nice to like go in and kind of see all of these people that didn't know each other, and they've kind of they've become friends, and if they were having to live somewhere else and maybe spending $500 or $600 on somewhere, they'd be in I think that they'd be quite stressed for money.
It's interesting strategy. I lived in London for 10 years and that is a very popular strategy. They call it HMOs, and a big international city. From an affordability play, it makes sense, right?
It does, yeah.
Melbourne, we see a fair bit of it as well where we are today. Perth, probably not as much. A lot to do with the mining. You do get a lot of FIFO miners that will just co-live because they're 1 week in, 1 week out. It's purely just a place to park their bags while they're out and enjoying their week off the whole time. What about Adelaide? So that is where all these properties are at the moment. Yeah. Is it a competitive market for that type of asset?
It's not yet that I know of, and I think in general they're soon. I think that they're growing, especially with the cost of rent is high and people are struggling to be able to afford things, and life is really expensive at the moment. So rent's not suddenly going to decrease and become affordable for these younger people generally who are not earning very much or studying. So I think that very quickly they're going to kind of take off, and it kind of has to happen. People have to live somewhere, and I can't see the prices, unfortunately, of rent dropping anytime soon. So this is kind of a good alternative rather than, I hate to think what else it would be.
And just looking at your strategy at the moment, there's a lot of talk that there is going to be a reform around negative gearing, capital gains exemption as well. With this strategy, you're almost eliminating yourself away from that risk if there was, a lot of the talk is around potentially 2 properties max from a negative gearing perspective. I imagine with the strategy you got now that majority of these assets are probably closer to neutral than in the negative. Yeah, they are.
So I guess it doesn't worry me very much, either of those things. I have always wanted to hold property long term and kind of reuse the equity in there. So I guess I'm not trying to kind of target specific things, and I'm not looking to sell quickly. And from a negative gearing perspective, I'm not really using that as a incentive. So
is that the strategy moving forward then? So you mentioned not all of your properties are dual occupancy. But a majority of them are, and it does actually help from a cash flow. Is that the direction you want to keep going?
Yeah,
absolutely. When you're building this portfolio out?
I guess the biggest thing for me is unless you have a super high income, you very quickly grow a portfolio that is so cash flow negative that you just can't afford it. And income, you can make your income grow, but there's a point where it's not sustainable and it's a lot week to week. So this strategy kind of has allowed me to grow a portfolio that's not so negative and grow more than I would have been able to had it been standard rentals. And so it works really well for me, and still within that, targeting houses that are kind of good for owner-occupiers and in suburbs that I think will grow in value, means that whilst they're being rooming houses for me, I'll be able to sell them on still with the owner-occupier appeal and go from there.
Awesome. I think it's super important having someone like yourself as a voice in that space, because you're completely right. I mean, you just made a comment there about being unheard, and I think a lot of young people just see all the doom and gloom in terms of getting into the property market. I think they're getting better as a generation, getting more financially educated, and I think a lot of it's got to do with social media and influencers out there at the moment. But still, the average person probably is pretty limited with their knowledge. And I think if there's someone in there that can be relatable and show them what's been done and you can achieve that, I think it's very, it's a very good niche to kind of
yeah, especially when it does feel really hard, and it is really hard to get into the property market. But I guess the more supportive I can be to someone and also to people who have some property and feel stuck and seeing if they can continue to grow it, that's kind of where I really want to be.
Okay, so we're 2026. What's your biggest advice to a Gen Z or a millennial for that matter that maybe hasn't entered the property market? What's your best bit of advice you'd give them to help them make that leap and really buck the trend in terms of what's been said out there in the media, where it is doom and gloom out there for a first-time buyer?
I think it would be to take a bet on yourself and trust, and you're in complete control of what you do, and knowing that you can, it's so empowering to know that you can make such a big difference to your life and kind of see where you can go. I think talking to people and learning and taking bits of I don't want to say taking bits of advice, but, taking on board things that people say and putting that, thinking about it in your life and seeing what you want to do is so important. And on the other side of that, there's a lot of information around in general at the moment with, there's people everywhere with different bits of advice, and I can see how it would be really hard, you can easily get confused and analysis paralysis, I think. So it's learning how to kind of filter all of that through and using your own values and things you believe to put that forward.
I've already mentioned, you've achieved so much already in terms of your business career, your property career. What does the next 2 years look like for Emma Roberts?
Borrowell becoming really big. I am so excited about it. It's still obviously a new business, but what I've already seen in the first 3 months of it being open and the people who've been able to kind of do something that they hadn't even thought that they could do with property, it's so awesome, and I love it, and I can't wait to kind of continue building our team and seeing where it can go. That's where my main focus is at the moment.
Awesome. Emma Roberts, thank you for joining the Follio Property Podcast.